I'm running a little bit behind, guys, but let's get started shortly. First and foremost, let me get my music going. I gotta get my music going, guys. Like, I'm sorry, I just got to. But I hope y'all have been having an amazing trading week so far. Today is Wednesday, August 3rd, guys. So let's peek into the market. Let's peek into a couple of things that the analysts may have said, things that's going on in the economy. I know I want to focus on oil today. With this recent surge that it had, guys, especially with the news that we had this morning, with President Biden going to, I believe. I gotta look at he was meeting with one of the I don't want to misquote this, but I'm gonna say Arabian princes, one of the princes over there, to talk about oil, guys. So let's really dive into that and then just go from there, guys. Okay. So give me a second. All right, guys. I'm almost done. Blah blah blah. Yeti. Yeah. All right, we're pretty much good, guys. We're pretty much good. Let me make sure. Mm, I guess the game mode is probably the best one, all right? But anyway, guys, again, it's the digital goat here with Digital Wealth Wednesdays, guys. Digital Wealth Wednesdays. So, as you know, every Wednesday, guys, we come on here, we do trade calls to pretty much talk about any opportunities that may be presenting in the market, but not just opportunities, guys. Getting a better understanding of what the economy may be doing so I can take advantage of that. The information that we talk about here, guys, is not just exclusive to trading, guys. The stuff that deals with the economy, you can apply this to the housing market. You can apply this to crops, guys. You can apply this to any other form of investment because it is pretty much information on what's going on with the economy. So let me pull up my chart for gold, and we'll go from there, guys. Actually, let's look at Bloomberg real quick because I want to see if they actually said that before we go into talking about gold. So let me see. All right, and I'm gonna pull up my screen for you guys. Firefox. Oh, you guys see you guys see pretty much the wall art I got back there, guys. Any of my anime fans, guys, I got me some new wall art. One of them is Naruto. And they're like holographic. So if you look to like back and forth, you can see like different images within it. And the other side is Demon Slayer. So shout out to all my people that watch anime, guys. I had to cop that when I saw that. So it was something that I definitely was going to take advantage of. But let me bring this down real quick. That's pretty loud. All right, guys. So Bloomberg right here. That's not it. Where was it at earlier? Hmm. Low C's. All right, guys. So I know that President Biden again met with one of the princes in the Middle East to talk about oil, guys. Now, what oil did was pretty much did an aggressive move or start to show signs that it wanted to do an aggressive move to the upside. But it was, pretty much plain. This is NFP week. This is non-farm payroll week, guys. So you can't expect the market to just give you, a straight line or a gratuitous amounts of pips, guys. So you have to play, safely within the market this week, guys. So when you have opportunity to make money, you capitalize on that income and then you look for other opportunities if you're going to keep playing the game, so to speak, guys. But the one thing that I saw, because I was taking advantage of oil this morning, guys, I definitely saw the opportunity for buys, right? And that's what I'm continuing to look for, opportunities for buys. So 15-minute time frame. Let's kind of back out, guys, as we normally like to do our top down analysis, just to kind of see what was going on in the market. Now, we had opportunities this morning in this space right here, this support structure right here, if you guys can follow that, right? This support structure right here pretty much allowed us to catch not, optimal buys, but pretty much some decent moves to take, or I think that was pretty much yesterday. That was yesterday. This support structure right here. Now, what the news did was pretty much inflict a bearish move in the market, or give the opportunity for more sellers to come in, so buyers have a better buy opportunity. Now, that recent surge, or that output, that hike that they were looking for, guys, I don't think it's pretty much taken fold, because as you can see, the move that was made this morning, what is this, a 4-hour? That happened pretty much around 6 a.m. and then the market completely reversed as the New York session was opening, guys. So you see, so we're pretty much at a support structure. Now, the one thing that I would emphasize when you're looking at oil, guys, make sure you follow, well, I'm not sure if you guys have the ability to see a different broker, but as far as I know, when it comes to crude oil, this is the only broker you could use, the TVC broker, as far as like trading view, right? So what I'm getting you guys to understand, that if you see that your numbers or your prices is off in oil, which it should be if you guys are using this broker, but using a different broker to actually trade in your MetaTrader 4, pretty much you want to match those numbers as close as possible. Or what you want to do is that any information you drew within your trading view, what you want to do is draw that information on your MetaTrader 4. And obviously we don't have all these amenities, guys, on MetaTrader 4 the same way we do with TradingView, but I urge you to really look at that. Pretty much orientate your MetaTrader 4 to TradingView. Your MetaTrader 4 is the correct one, right? So you don't want to try to orientate your TradingView to MetaTrader 4. You want to try to orientate the y'all know what I meant. I said that backwards. You want to try to orientate the TradingView to MetaTrader 4, not the MetaTrader 4 to TradingView, if that makes sense. I hope I ain't lose a lot of you guys, but pretty much we're at this support structure, or this demand zone. Very high, guys, especially what they're talking about. I'm really trying to find that news that happened, guys. Hold on, let me see if I can find that news real quick, because it was very important. That was on Bloomberg today, guys. It was on Bloomberg. Attacks Pelosi, blah blah blah, voters, no country, Russia. I know Yahoo. I just happened to see Yahoo, guys. It actually talked about, like, there was a failed fist bump between President Biden and the guy he was speaking with. Why don't I see this information? So the OPEC pretty much sent out a report, guys, which pretty much said that, now you can actually find this on CNN, guys. So if you see, all I did was get the information that I got from Bloomberg, which is what OPEC was going to do. I hope I'm saying that right. Now, guys, that's intergovernmental organization, guys. So that's pretty much an international organization that deals with like oil, guys. So they pretty much talked about agreeing to produce slightly more oil for the recession fears, right? So I kind of predicted that the same way, guys, because again, just trading, just being at a level of structure or a level of support, however you want to slice it, guys. I anticipated that oil was looking to get bullish. Now, I'm not saying oil is about to go sky high. I do believe, my personal sentiment is that I do believe oil is going to climb high. Now, I think that pathway that it's going to take is going to happen probably like into 2023, 2024, because right now we're probably just being like a range in motion, guys, just trying to regulate the market. Because again, gas was super high, inflation is still super high, and the job market is not paying people enough for them to go to work. This was like our last conversation, guys, so if you understand that. So with oil going up, I'm not necessarily sure how much of an impact that's going to do to the economy. I don't see any fears of gas rising like they did previously, but I do see in the long run gas rising. Guys, if you understood my conversation the last time, I'm really emphasizing people to invest in electric vehicles, guys. And when I say invest, I say that loosely. Like, you pretty much need to be changing your whole arsenal. Now, I wouldn't say go full electric. And what I mean by that is like, don't just start selling all your inventory of vehicles, whatever you have, or trading them in, and then just go full electric. But guys, you want to have an electric vehicle on hand, because there's going to be times, especially when oil starts to rise aggressively again, where it's going to make gas go up, guys. And as you know, in California, they were paying $7 a gallon, right? Now, I'm on the East Coast, so many of us would probably say $7 a gallon. I couldn't even go to work with that. Well, in California, they did. So what we've already shown, guys, is that no matter what the economy throws at us, we're resilient towards it. You know what I'm saying? So that means that we're pretty much adapting to the circumstances, which is unfortunate, because we're literally showing them that even if we're broke, even if we don't have enough income to pay for it, we can pay for it. You see what I'm saying, guys? We can pay for it based off of, what does this feel like? This is not centered or something. We can pay for it, guys. That's what the data has being presented to the economy, guys, that Americans, well, across the world, I'm not sure how they're dealing, on the east side of the world, but I know over here, we're adapting to it, guys, and people actually can't afford it. So imagine when oil or when gas goes to $7 a gallon on the East Coast, and the jobs still aren't increasing their wages. They're not increasing minimum wage, guys. They're not paying more people to come to work. Hell, if you understand the transition of the economy because of a technological basis, guys, they're looking at more effective ways to still get the job done in their business while not having the people there. I already told you last time, guys, the economy is, or business owners are looking to do AI, are looking to get into robotics, guys, to replace the average fast food worker at this point. But when it starts showing promise, guys, it's going to climb all the way to a corporate ladder. So something that they feel like a human could not be efficient as, they're going to replace it with an AI, guys. Now, I think that that's bad for business, but at the same time, one, overall, it's probably going to be cheaper for them, guys. The only expense they would have to do is to maintain the systems. And if they're bringing in the revenue, then hell, they're definitely not going to see the need for human, guys. We're going into that transition where there's not going to be a need for human beings in certain jobs. And I'm not saying everything. Obviously, we're still necessary because we're the ones that's programming these damn AIs, guys. But I urge you guys, really start looking at other opportunities, not just like on the investing side, but how can I manage my income better? How can I manage my resources better, guys? Again, I would say a start is how am I consuming energy? So if I'm not using renewable energy, maybe I need to be somebody who invests in that. If I'm not using solar energy, maybe I need to be somebody who invests in that. If I'm not looking at alternative means to pretty much power my house or, run my water, things like that, I'm urging you guys, because the cost of oil is going to go up. What does that mean? The cost of gas is going to go up. Things we use to burn for fire is going to go up, guys. So I'm just telling you ahead of time, because we may not see the transition for like the next 5 years. But when it happens, people are going to act like they didn't even know this was coming, when somebody like me has been talking about it the whole time. Hell, somebody before me was talking about this, guys. You know what I'm saying? So I don't want to get too preachy. Let's just kind of look at oil, guys, and see if we can make a decision from there and then utilize other resources. Obviously, I got to go and talk about the dollar, guys. I'm American. I'm in the United States, so I have to follow my country's currency, and that's how I stay up to date with the economy, right? So let's look at what the dollar has been doing. So one thing again, what I've been seeing from the dollar, guys, is I've been seeing the dollar still showing signs that it's aggressively hawkish, guys, or bullish, right? Now, we did have that, what was that, when was that rate hike? When was that rate hike, guys? That was last week? Was that last week that we had the rate hike and the market dropped? Yeah. So it was somewhere up here. Okay. We had a rate hike pretty much somewhere up here, and the market started selling pretty much aggressively all the way back to a previous zone that it looked like it broke out of, guys. So one thing that I did show on social media is that if you use Fibonacci, I'm a big fan of Fibonacci, guys. Now, if you don't know what Fibonacci is, guys, you have to go to my previous videos. This is not that day that we're going to be talking about it, but for all my traders that do already know what Fibonacci is, if you look at it, pretty much this thing kissed off the 50% to a T. Now, I like that movement, not too aggressive to the downside, not too shallow to say that, man, I'm just kind of coming back up here to continue to fall down. Now, I do believe that we're in a correction phase, and I don't know how low the dollar will travel, but I do see the potential right now that we're still in a bullish momentum. But let's also use another identifier on how we can see, is there strong momentum to the upside? Let's see. And all you have to do, guys, is go to your candle bar right here, or where it says candles. Go down to Heiken Ashi. I used to say Hakanashi. Heiken Ashi candles. Change it and see. And if you look at the momentum, the overall. Now, again, if you're still not familiar with trading to a T, guys, just go off of colors, right? Blue means buying or uptrend or hawkish momentum, and red means selling. Or bearish or a downtrend, right? So if you look at it, we have a lot more blue than we have red, guys, signifying, even if it's not done retesting, that the momentum is still strong to the upside. It just has to do correction phases in order to, balance out the market, guys. Pretty much plain and simple like that. I do expect it to eventually come down to this zone because this is really the area that it broke out of. But again, I am still bullish overall on the dollar, guys. I do not see the dollar, pretty much reversing at all right now. If you just look at it on a monthly time frame, now this is a pretty high time frame to go off of, pretty extreme, guys, right? But as far as you look at it, even if you don't know nothing about trading, just looking at it, the momentum looks to the upside because we have a lot more blue than we have red. Now, I know there's some talks about that we're going into a recession or we're officially into a recession. I personally don't believe that, guys. Again, I've been mapping out the times that we've had a recession, like I showed you guys on the last call. But again, let's just kind of look at, excuse me, guys. Let's just kind of look at what happened when we did go into a recession from the last recession we had, which was like 2008, 2000. Well, it went into a recession before that, but people didn't know until they were in a recession. So that's what I'm getting out, that people didn't even know. So how is somebody can label that we're in a recession? Just because, like, I get by the definitions 2 negative quarters back to back, but the thing that's different about the information we had back then, guys, is that there's new players in this market, myself included, yourself included, that's on this call. You bring a lot to the table, even though you're not the biggest one. You know what I'm saying? Understand, there's way more investors than there was in the 1930s. There's way more investors than there was in the 1970s. There's way more investors than there was in the 1990s all the way to 2000. Way more investors, guys. So that's going to present new data. That's going to present new data that changes the dynamic of what the market should be giving us based off of definitions. We can't use old logics when we have new conditions in the market that could change the very being of how we're looking at data, right? Again, guys, cryptocurrency is something that's super new. You know what I'm saying? You factor that into the market, you can't 100% sit here and say that, oh man, we're in a recession or the market is going to do this, because there's new data that has arisen, guys. Now, the one thing that I'm looking for, guys, is that I'm looking for the market to, one, actually meet this zone up here or close to it, maybe like the breakout structure of it to continue down, because I do believe that the dollar will eventually collapse. But and then we'll be driven into the potential of the start of a recession. I think by then the dollar will get a handle on things, because we have two potentials, guys. Right here, what is this? This is 2001. What happened in 2001? 9/11, guys, right? September 2001. Now, if you look back, September 2000, let's go to September 2001. Because we can't honestly say that the market does repeat itself. And it doesn't do it exactly, but it gives signs of what it may be trying to do. Now let's look. 2001. How did I skip September? So right here. I didn't mean to do that. I meant to put a vertical line. Where are we at? All right, so this is supposed to be 2001 September. Now I'm gonna hone in on it, right? Let's just see what the market did at that time, right? So right here, September 2001. Now the market did, pretty much show signs that it wanted to collapse to the downside, right? September, all of September. So I'm sure, um, what is this? The 3rd of September? It is the 3rd of September. So this initial move, guys, brought the market down, right? This is a monthly time frame. So that move was probably aggressive and people were probably surprised that it happened. That's like a 2,000 pip move. That's crazy. 2,000 pip move, and it probably happened super fast, like especially since it happened in 1 month. But it gave you indecisive candle. Now, guys, next week I will say we are going to focus on candlestick reading, because identifying this candle right here could have put people in a position to at least make money for the next couple of months, guys. This is a monthly time frame, so if we identify this candle, you could have potentially been in a buy 1, 2, 3, 4 months. Well, I mean, unless you want to count this, 4 to 5 months in almost a 6-month span before the market decides to actually trigger into a recession, right? Let me go back. Oh, why my things being difficult today, guys, right? So the market actually triggered, but nobody knew until when? Nobody knew that they were in a recession. Want to know how I know? It's because I went to the United States Army at that time, guys. And the only reason I knew is because my mother and other parents were telling me that, yo, we're in a recession now, because it was a big talk on the news. But nobody knew that they were in a recession prior to that. You were pretty much already in a recession. You just had to have levels break. But this was your confirmation that we were in a recession. Oh, I thought that was definitely thought that that was a horizontal chart. I mean, horizontal line. So I talked about this last time, guys, but September, wow, September is just that's crazy. September is just an odd month, guys. So I would definitely keep September in your back pocket, right? But September of 1992 was the lowest point the dollar has been in existence, right? Until, wow, man, September again. Whoa, that's crazy. I'm learning new stuff over here, guys. But anyway, September of 2007, you pretty much knew, or I mean, if you want to say October, but September of 2007 is when we actually knew we were in a recession, right? Most people didn't know, because again, I was going towards, the United States Army at that time, guys. So I didn't know what was, how people were being affected by the economy like this. And I guess maybe you knew December. Maybe some investors knew at December, 2005, but the average investor, the average person They didn't know until price broke these thresholds, because now it's affecting everybody. It's been affecting everybody, but people had their optimism that there was going to be a bounce back. But once it broke these levels, oh yeah, you have people losing money in stocks, guys. You have the job market doing bad because they really can't afford to pay nobody. I understood what was going on during that time, guys. So until we get another reaction like that, I can't honestly say that we're in a recession, guys. You know what I'm saying? I get the definition of a recession, that you need 2 negative quarters. But until I start now, here's what I will say. I'm not naive to the point where I won't be able to try to spot the potential of the start. But most people, unless they're trading on their own, or an investor, or getting some insight from their own personal financial advisor, they don't know that they may be triggered into a recession, or it may be the start of a recession. They'll just know on the back end, like, oh man, we're heading into a recession probably after the market has started to collapse. Are you understanding that? Is that making sense? Now, again, guys, I'm going from my own sentimental point of view in research that I did, but I understand, because there's new players in the market, that new data is going to arise, and we can't literally look to the past to say that it's going to do that exactly. We can just gather data that when it starts showing signs as the past, we can use that information. Right now, the dollar hasn't been showing signs, that it's going to emulate the past right now. Because again, we got to go off of structure, guys. We have to go off of the law in the market. And the law of this market is that it needs to be at structure zones in order for it to sell or buy, guys. Strong structure zones. So if I'm just honestly looking at it, I'll say this is a strong structure zone. If price wanted to respect this, I can see the dollar climbing a little bit higher. What I'm saying, with pullbacks, I can see the dollar climbing a little bit higher. What I'm really looking for is that when we reach up here, when the dollar decides to reach up here, because the momentum is just strong to the upside, guys, I do believe that may be the start of us triggering into a recession. But understand, the rest of the world, guys, are having fears of going into a recession. So if they're having fears of going into a recession, how is the dollar as a superpower going into a recession? If that makes sense, guys. So, again, all this stuff, everybody doesn't have the necessary answers. This is a lot of speculation and data hunting. I'm not saying that anybody is saying something wrong to you guys or giving you false narratives, but at the same time, you just got to be open-minded that it may not play out the same way of what we're used to. Because again, even with my experience, a lot of us are coming into this opportunity or coming to the skill set like new, never having experience with trading, family never talked about it, what I'm saying? So it's like the only data you can get is what presented before you, and then information from like research, hardback books, things like that. But just using the definition of recession to identify that, man, we're in a recession because it did that, I just don't believe that, guys. Me personally, again, I could be wrong, but I stand strong on my bias. And it's not about necessarily like a right or wrong thing. It's about getting enough of that data to use this information in a live market. That's the only thing I care about. I don't care about, the dollar could start to tank all the way down here, guys. I necessarily don't care, but I'll just have to adjust, my predictions or my analysis, because clearly, I was off by a landslide. But again, I really don't believe that, we're into a recession. So that doesn't change that things are different, guys. And what I mean is that, because even though we may not be going into a recession, it's still bad that we're in inflation. You see what I'm saying? Because that's going to cause other things to continue to rise, guys. It's going to cause crops to rise. It's going to cause, food to rise again. It's going to cause energy to rise, right? Again, the dollar is a superpower across the world, guys. Most countries use our form of currency or have it as at least an alternative. You know what I'm saying? So I do believe that as these other countries are going to go into a recession, or maybe start going into an aggressive downtrend, people are going to, across the world, are going to start using the dollar, because the dollar has a little bit more faith than some of these other currencies. Let's just check Euro USD, for example. Now, I like Euro USD. And the reason why I'm so adamant about Euro USD right now is because, one, because of what's going on in Europe, guys, with the war with Europe pretty much getting cut off their resources for oil, right? So they're getting cut off their resources from oil because, Vladimir Putin is pretty much, requiring that if people want oil, they pay in Russia's currency. And most of them are like, no, we don't want to do that. I'm not sure for what reason, but I'm sure it's like to have control because, well, I mean, no, I do know, like, you don't want to boost Russia's economy and they're trying to go to war. You know what I'm saying? So forcing people to pay. Now, some countries have to do that because they have limited resources, but Europe is a pretty big country, so they can find alternative measures and pretty much say, nah, we're not going to invest in your country's currency to help you, get more rich or to get more wealthy or to have, resources that could literally, put you on top of the world. Again, Russia could have been a superpower, guys. Again, we know what the Soviet Union did from history. So Russia could have been a superpower, guys. So that's still not out of the ballpark for them to do that. And I think that this is kind of like a strategic move for Putin to do that, guys. Now let's look at Euro USD, right? Again, I follow the dollar, right? So I think we talked about Euro last time. So Euro USD, guys, it's been on a selling tear, guys. Now it did pop up over here last week. We did have a rate hike. Where was that rate hike at? It was last week, right? Was the rate hike last week? Yep. Okay, so yeah, the rate hike was over here, guys. This was the rate hike. I remember. Yeah, 27th. This was the rate hike. Retested, pretty much brought the market all the way back up, and that's pretty much to stop them. That's pretty much to stop them from going into a recession, guys. So when you're looking at rate hikes that happen, it's pretty much to balance out the economy, guys. Because again, if euro kept on selling, like, that would be bad news for it. It would have triggered it into possibly going into a recession. Let's just look at it from a monthly standpoint. Now, if I got a lot of drawings going on here, excuse me, guys, forgive me, but if you just look at this overall, guys, the euro has been extremely weak. I mean, like, extremely weak, guys. Where does, even as a trader, even as a novice trader or a beginning trader, do you see the opportunity for buys? I'm not saying that they won't present themselves, but you won't be able to predict that as easily as you following structure saying, like, oh man, when this thing comes back up here, I should look for selling opportunities, things like that. You see what I'm saying, guys? I mean, buying opportunities. But overall, guys, if we just look at structure, because that's the law of the market, structure, and I like to go to a line chart so people can kind of make sense of looking at structure. Let's start right here. This is the lowest point that I saw after the market broke out, right? And let's drag this all the way over here. Do y'all see that how, okay, we may have tested these areas aggressively. We broke it. We tested these areas. Even if you decided to say, all right, I just want to go to the lowest point, all right? Say you wanted to go to the lowest point, right? Trying to capture the wicks too. I like where structure's at. So if you just look at it, guys, you got test, 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 fake out. People probably thought, I'm sure, oh, this is 2014. Yeah, I wasn't even trading it. I'm sure people was like, oh man, the euro's about to be a powerhouse, right? Straight collapsed. Collapsed, guys. Well, guess what? On this opposite side, test, test. What do we need to create a level of support or resistance? We just need two zones where price has been tested at, right? Or 2 points of contact where price has been tested at. 1, 2 overall, guys. Don't make it any harder than it needs to be. That creates a double top if we're talking about trading patterns, and that brought the market down, guys. And there's really no signs of the market showing that it wants to present itself. Now, because we had like strong test zones over here, we may have the market decide to come all the way back up here and test. That would probably be followed or triggered by a rate hike, right? So euro would have to pretty much say that, yo, we're looking to have another rate hike, which could aggressively push this market up, unless for whatever reason the dollar just got extremely bearish. If we were into a recession and the dollar started getting extremely bearish, I could see the euro trying to pull all the way up here. Again, this is a monthly time frame, so this will take months to unfold when we first get our first viewing of the market actually starting to reverse. So this will be an area that I will look for the market to test. I can see it popping up a little bit higher, but again, I don't like to go too far in the future, guys. I'm just giving you the overall bias, monthly time frame. If we just break it down again, guys, what do we need in order to confirm that we're in a downtrend? We need a break of structure, and we need price to return to those levels of structure twice in order to confirm that, yes, we're in a downtrend. Twice we're in a downtrend. So even if I was confused, let's look at these higher highs and higher lows. All right, so you have, well, lower high now, because this was your higher high, right? So you have your higher high, or lower high if you want to say that. Let's just start from this point: higher high, lower high, another lower high, lower low. I'm gonna just clone this. But I hope y'all tracking this, right? I'm not trying to throw confusion out there. I'm just showing you guys from my perspective on where we're at according to the euro. So you guys should be able to do this on other trades, right? Okay. Lower high, lower low. Let's ignore that one. Lower high. Why is my thing not? Oh, there we go. Lower low, you know what I'm saying? Lower low, lower high. Now, this is a higher low. This was a higher low, but this created a new lower high. Now we broke out of that area. So if we are bullish, where are we looking for the market to potentially return to? Which I don't think that we're bullish anytime soon. But if we have projections, 9 times out of 10, it's going to be somewhere up here. They keep the momentum back to the downside. And again, with their rate hike, if they have another rate hike, I can see the market being pushed up all the way to the zone up here, guys. And that'll be like 50%. Once we get more data, I'm not sure if I don't believe we're done selling, especially with the market being so aggressively bullish, guys. But this would be probably your area that you're looking for the market to return to. One is because it's a high traffic zone, not necessarily because it's a low point, but it's a high traffic area for a low point, right? Low point, low point, low point, low point, low point. So in all honesty, what may happen is you get your return down here because this is the most aggressive low point. Now, guys, if you look at it, this is kind of where patterns play a significant role. Because if you look at this, now I'm not trying to tell you that this is exactly how it will play out, but it's no coincidence that the pattern does almost identical to the other pattern. Now, you guys are probably like, well, what are you talking about? Let me show you guys real quick while we got this up. And then obviously, guys, for the ones that stayed on, y'all know how I roll. Let's look at the potential of a trade idea. I know last week we took Euro USD, definitely smashed, had three opportunities. So you had 3 opportunities. One, you could have got in initially off the sell. And I actually have the same sell area that we called out. I believe that this was the same sell area, or it might have been a little bit lower, but price went up, gave us like TP1, TP3. I think it even like kissed TP4, went all the way back up, then came down to like TP2, then came up to stop loss, which was only like 18 pips. And you had the opportunity to enter through the stop loss, guys, and pretty much get more money because of it blew through all the pips, guys. You know what I'm saying? Where is it at that I'm looking for? Always do this. Oh, there we go. Okay, so this pattern right here, right? I'm gonna stop. I'm gonna stop right here, right? What's crazy about this pattern is that if I try to match this up just a little bit, is this? Not exactly, not exactly, guys, but almost. Well, no. Oh, no, I'm reaching. So not exactly, guys, but close enough, right? What I was trying to get you guys to see is that you see how this low point was higher than these low points. Now, if we erase this, do you see how this low point is higher than these two low points popped up, and then the market, obviously created a new level of resistance and then shot down? This almost looks like the same pattern, but just didn't execute in the same way, guys. I want you to start spotting or identifying things like that, because I will help you perceive, or at least when you get enough data to be like, man, this thing did, react in the same way. And did it not sell after it created a new level of resistance? Absolutely. So that's stuff that you want to identify. Like, yes, this is a bigger move, but the pattern still looks identical to what happened here, guys. And this was like in 2008 all the way to 2012. This was in 2015 all the way to 2017. So what is that? 2008. So 3 years, basically 3 years. I mean, give or take, probably like 2.5 years. Same thing here, 2 years, guys. That pattern took 2 years to form. This pattern took 2 years to form. Are y'all following like the consistency of like the patterns that go on within the market? Now, this is definitely a double bottom. You could have treated it as a triple bottom, but this is definitely a double bottom. So even if you didn't match it up to what happened in the past, you can still say, oh man, I could see this market pretty much going aggressively, understanding that, man, this thing just created a new level of resistance. So if it did that, I have to respect that the market will probably want to come back to that. And that's months at a time, guys. So you're talking about somebody being able to identify this, jump in the market, ride the wave pretty much to the previous, breakout zone, and then just catch, either buy it up or catch the next move on the way down, which was more aggressive. Are y'all seeing that? Man, I hope y'all are seeing that, yo. It's crazy out here. It is crazy. So let's look at Euro USD, guys. I'm gonna look at, I think, GBP JPY, Euro USD, and then let's kind of go back to oil real quick. Now, the thing about oil is that I won't give out a live analysis. I'll just give you guys like what I'm looking at, because I understand that if you're using a different broker, you know what I'm saying, your spreads may be off. Your spreads and your pricing may be off. So you may not, I may be at like, I don't know, let's even say this. Let's even show. Let me see. Okay, so right here, oil is at 91.11. This is on TradingView, right? But on my MetaTrader 4, I'm at 90.55. Y'all understand? So you want to orientate, because your spreads may be off of oil. So I don't necessarily want to give you guys like any parameters, because you could be off and then actually hit your stop loss, and it really didn't hit stop loss. It's just that it was early because you ain't orientated to your MetaTrader 4. That makes sense. But this is my support zone. I am looking to continue to buy oil. I'm going to see if it's going to create another support structure, or if it's going to take off from here, because as you guys see to the left, we do have 2 points of contact. So we do have a point of contact right here. Now we have a point of contact right here. Let's just overall see what the move is. You find your entry, guys, and then, take it for how many pips, you're willing to risk. You know what I'm saying? But yeah, once you get a breakout out here. Like I like this zone. Once you get a breakout out here, I mean, you have basic structure. You have basic market structure. The market broke out of here. In theory, it should want to retest this, pop up, continue to do the same thing over and over until it has a breakout. So I am looking for oil to be bullish, guys, and I'm looking for oil to be bullish for quite a while. Now, don't quote me on pretty much this level of resistance, because again, based off our broker, you're going to be off. But I am looking for like this candle, this candle on your MetaTrader 4 for oil to pop back up here, right? Somewhere in this zone, if not, you know, this zone right here. So it just depends on what it wants to do, but I do see a potential aggressive hike for oil, especially like everything that's going on. And it'll be slow. It'll probably be choppy, won't be super aggressive. As you know, guys, oil moves, but it moves in spurts. So it'll be slow, and then it'll start to make its overall move, right? So let's look at GBP, JPY, because I am looking for bullish moves in there. And yes, we got our bullish moves, guys. Like I like to see this. So based off the daily time frame, let's look at the weekly. Make sure. Oh. So right here, people, again, if you're inexperienced as a trader, you may not factor this in. But guys, right here was a level of resistance that the, oh man, wrong thing. Level of resistance that the market broke out of, right? Right here at this point. Level of resistance, and let's do this like, because it's like support / resistance, right? The market decided to aggressively come down here and then completely reverse, guys. I do not see that as a sign that the market wants to continue moving down. Now, I do see from a monthly standpoint that we could be bearish. We could, you know, be bearish for GBP, JPY, but I think what it's going to do is want to collect some liquidity, close a candle out here without leaving all this wick movement, and then bring the market down from there, guys. So I think overall we're bullish on GBP, JPY. One, I was following Japanese yen for quite a while because if you guys know, the yen was doing terrible as far as like within the economy. The yen was like selling like super bad, and it was a lot of talks within the government, the Japanese government, the Bank of Japan. There was just a lot of talks about getting a handle. And I don't know why that their currency was just depreciating in value so bad, but I'm sure it's obviously something dealing with, you know, probably like COVID or negative impacts in the economy, especially with oil reserves, things like that, guys. So I do think that we're overall still bullish. It's just about finding your zone. So what time is it? It's not 8 o'clock. Y'all know how I roll, so I kind of want to see what 8 o'clock is going to show us, and then we'll make a decision from there. All right. So let me mark this up real quick, guys. So if you see, again, I'm not heavy on indicators, but I have been following these EMAs, guys. Right now, the market, as far as price action, is heading to my 21, which could be considered like a 50 EMA, guys. I do expect it to bounce off of this and then bring the market up, right? So that's what I'm looking for, based off of this information right here, guys. And you see it's selling because it's about to be 8 o'clock, and then we'll make a determination from there. So I like what it's showing me. And let's do this. Let's go ahead and get our parameters and figure out where we're going to enter. Again, guys, if you see opportunity there, definitely take it. But if not, If not, that's cool too. So I don't never say like, hey, this is something that you should jump into right now. Let's definitely be patient and see what the market may bring us. So that way we can get a better opportunity if it presents. Because not every trade that you enter is like a quote unquote sniper trade, guys, or sniper entry.
And oftentimes it is also a place I go to
All
if
right.
I'm seeking for inspiration for my videos
That's
because
yeah, we
not
definitely don't do
everything
no
always
72 pip
starts with a
stop
good
loss.
song. Thanks to their unlimited all access license, I can download high quality music and sound effects as much as I need. Fast and new ones are added every single day. With an
So 30
affordable monthly
pips.
subscription, I
What
am
I'm
able
do
to stay
what I
connected
want to
with
see
music
is at like
while also
8:05,
ensuring I stay
8:15, something like
updated.
that. And we get a reversal. If you look at on the hour time frame, guys, you still have this EMA down here. I definitely did not see that. Is that the 4 hour that we were looking at? I think that was the
When you're
45
starting a
minute.
business, every dollar counts, but leaving yourself vulnerable to legal issues can be a costly
Okay.
mistake.
Yeah.
An LLC can protect you and your business and make your company legitimate in the eyes of the government. Here's how to form an LLC online for free. Step 1. Give your LLC a name that's not used by another business in the state and choose an official address.
Looks like
Step
this thing
2.
might be getting
Choose a
away from us.
registration
Let's see what its move is going to be,
Get
guys, and then
notifications and
make the
invoice
decision from
timers
there. How
regarding your
do I?
business. If you file your
How come
LLC
my
with
thing is not
PayPal,
like?
registered agent service comes completely free for the first year. Step 3. Get a copy of your state's official
There we
company
go.
registration document and review it to find out what other information you may need to
So
provide.
30 pips stop. Now, here's the thing, guys.
Research
If
your
if it
state's
gives us
other
the
LLC
move
formation
and then you
options.
see opportunity just
Step
like we had
4.
with
Search for a series LLC.
what did we
Step
have
5.
last week? Euro USD.
Fill out your registration
Like for
document
Euro
and
USD,
double or
guys,
triple check it for
same
accurate
thing, gave
information
us a
about
little
your
bit of
business.
pips and then we had the opportunity to catch it at its stop loss. So same thing here, guys. You see this thing move down to the stop
Your
loss.
LLC is
If the
formed.
trade's still valid,
A
you
lot
may
is
want to take
missing,
it
and
there.
Inkfile experts can help. You just pay the state fee. Check out the description below for more details.
All right, 30 on the dot. So blah, blah, blah. Now you don't have to restrict yourself to like my parameters, guys. If you feel like, man, I'm not ready to enter in this right now, then don't. Or if I see more opportunity, then have at it, guys. Just remember you're using proper risk management. You know what I'm saying? All right. Uh, exit number 3. I'm probably looking at me potentially, guys. I'm looking probably to get in this trade. 805. Now, guys, if you enter in this trade and it's within the stop loss, obviously adjust your stop loss to match the amount of pips we were gonna have for our stop loss anyway. So don't just put the same stop loss. Do the math and adjust your stop loss based off of where you entered. These are just parameters so for you guys to use, you know what I'm saying? So I hope y'all got that, man. Y'all see what I'm looking at for oil? So what are we looking at? We're looking at the potential of 103 pips. Our first two targets are 23, 23 pips. 53, I would definitely, because we'll hit a level of resistance kind of um, when the market pretty much pushes up here, guys. Um, so yeah, that's pretty much it, guys. You got your parameters. If you need to go back and view the information, guys, definitely go do that on your own. Let me make sure everything's aligned. Blah blah blah. 80. Yeah, you get your parameters, guys, and then just go from there. Just go from there, man. But again, man. Oh, one thing I want to say is like, if you subscribe to my page, if you view my page, I definitely want to do a special shout out for you. I have something that I'm going to be putting together because we just reached 100 subscribers. So in all honesty, guys, thank you so much for participating with me. Thank you for supporting with me. I definitely couldn't do this without you. So I'm excited about that. I haven't posted it on social media yet, but definitely, if you have my social media, which is the digital goat the digital underscore goat, or you could do it to my trading page, which is just digital underscore goats. But the digital underscore goats, that's my personal page, guys. So definitely when I post about it, guys, if you want to put yourself into this raffle that I'm going to be doing, drop a comment in there, and then we'll figure out what we can do from there, guys. What other challenges I'm gonna have you guys meet. But definitely thank you, guys. Again, I couldn't have done it without you guys. And we're just looking to climb even higher. So 100 subscribers, I'm excited. Never thought that I'll be able to do that on YouTube. And I know there's other ladders to climb, but I'm looking forward to what YouTube is going to bring me. And I hope you guys are continuing to find value. So I'm the digital goat, guys. I'll see you guys at the top because I plan on taking everybody to the top with me. God bless y'all. See y'all next week.